indeed a good pleasure to be here, and so glad and overwhelmed to know actually that you have been supporting us in terms of our philosophies, the way we have managed fund, and that is something which is very precious to us. We really like that, and I would whatever I have understood from Sandeep, knowing about him, I feel your money is in really sensible and safe hands. With money, I think what is important is that we go through a lot of phases in the market. There will be phases where markets are like zooming up every day. Fund managers are redundant. So nowadays, frankly, looking at so much of crowd, I think I feel good because people are not really ready to listen to the fund managers, because fund managers are giving you 15% CAGR return, but every other guy is doubling the money in maybe 5 or 10 days. So that is something which is a phase in the market. But I think money grows through your sensible way of investing the capital into the markets, and there is a method, and eventually the cycles will find their own ways to change the course, and eventually what we'll end up doing as a matter of returns is going to be what the fundamentals eventually drive the markets towards. So I think that is a core principle about money. Before I start on what I have to say, I have kept this session quite that way open because I just felt that let me try to discuss what are the important aspects as far as the markets today are concerned, what investors are thinking. I mean, like you, very frankly, even we are confused at some points that, how is it possible that some of these market moves we also are unable to, decipher. But anyways, I'll try to make some sense out of what is happening. And before that, hearing Sandeep, your team, to you, your company, 1 decade completion, that's a very good achievement. I think you started in the right period. I would say a decade back to now is a very good journey for all the equity investors. Definitely mutual fund sahi hai, equity sahi has proven right in the last decade. So great, congratulations to you, your team. Good to see your team. And I my only, I wish you good luck for many more decades to come and great success for your future. So maybe as he is working upon it, I'll maybe just give some background so that Sandeep, thank you for giving my small background, but let me just add to some bit of the nuances what I have done previously and how it has actually helped me in, again, maybe managing the capital more sensibly. So I started my journey in 1998. I'm a chartered accountant by profession. I cleared my chartered accountancy in 1997. And 1998, with a small time broker in Mumbai, and I was unfortunately given the technology sector to handle. So I was doing research on the IT sector, and we all know that what happened in the year 2000. I assume that most of you might be part of the market since 2000, as I see the color of the hair. We saw this massive rally which was taking place in the tech sector, and the stocks which I was researching, the starting point was, let's say 20 P का stock था, वो 100 P जा रहा था, 200 P भी मैंने देखा stock जाते हुए. So I new to the market, and suddenly I used to feel great about what's happening in this market, and I felt that that's a very good way of making money, that you just put money in markets which are trading at, in the stocks in IT sector which are trading at maybe 30, 40, 50, 60, 70 P, and see them go to 100 P. Not recognizing that these are excesses which are getting created at some point, but good learning during the initial phase of the journey. And as we saw year 2000, we had seen this tech bubble burst, and very frankly, every time when the markets are going through those excesses, it becomes very difficult to decipher how it is all going to end. But there are some trigger points, something starts, and that leads to the debacle. And we saw the tech sector meltdown. Then I think 2008 again we saw the whole boom before the Lehman crisis led to the whole global financial crisis, and that led to the correction all over the world, which actually was a very frustrating period, by the way, because 2008 से लेके 2014 तक कोई रिटर्न नहीं बना. जो पीक में डाल दिया था लोगों ने, उसके बाद 2014 तक कोई रिटर्न नहीं बना. And believe me, those periods become very frustrating. We all like these markets. We all say that mutual fund सही है because सबके पोर्टफोलियो में मिनिमम 15% कैगर तो दिख ही रहा है, और 20% 30% भी दिख रहा होगा, बट आई एम सेइंग मिनिमम 15 दिख रहा है, तो इट लुक्स वेरी गुड. बट देयर विल बी फेजेस वेयर देयर विल बी नो रिटर्न्स, एंड विच इज वेयर I think the behavior becomes important. Market, other more than your stocks, it is a behavior which actually determines how much return the individual is going to eventually make in the market, and it is all about wealth creation over long term. So good part is that in the initial phase 2008 maybe crisis dekha, stock prices corrected, and then we said that then after seeing all that 2010 I got the the opportunity to manage capital, and because I had seen a lot of companies in the mid and small cap segment, I was assigned the then known as DSP micro cap fund, which is today known as DSP small cap fund, where most of you people through Sandeep have their investments into. And the only starting point for me was, having seen those two big crises, was money definitely can be made in the market, but what is a sensible way of making money is to sort of not only select good companies but eliminate bad companies, and it is very important that this elimination becomes important. So at that point, those were some of the very fundamental foundations which were built, and we said that let us look at companies which have specific criteria for us, which we will select in our funds, and companies which generally do not meet those criteria will not be looked into. So as I said, that 2008 to 2014 journey was such, where 2008 peak somebody had invested in my fund, till 2014 beginning there was zero return. So 100 rupees became 40 rupees and it came back to 100 rupees in the 6 years. So investors asking, आप तो बोलते हो 5 long term में पैसा बनता है, 4-5 साल हो गए क्या, is this not long term enough? So I said हाँ बनता है, लेकिन you have to still have patience. And 2014 end में जब this fund actually almost doubled from the beginning, and the CAGR became 15%. मतलब 2008 के peak से 2014 के end में जो CAGR आया वो 15% था. Which means that sometimes the markets actually really tests your patience, and all your historical assumptions can go wrong, because this is a very unpredictable field and we like it for it being unpredictable, and behaviorally is what we should align ourselves to make money out of the market. So that's the background I wanted to start with, and let me basically give some bit of the thought process around the markets right now. Where are we in the cycle? Where are the valuations? We all are aware, but it is always good to maybe just get some more data around these and have some views around what is happening. What I have tried to do is that I captured my thesis through some of the data points which we are seeing on a day-to-day basis, so that it becomes relevant and it just doesn't remain a narrative or just a statement without any data. And then I would really like to talk about, after this, our philosophies slightly more in detail, some bit of behavioral aspects, so that as investors we become more resilient and better in terms of our decision making. So I hope that is good as a agenda for today. So let us start with the year 2024, and as I said, I believe in really long-term views for the market. Long term we remain positive, but we need to be also aware about what is happening in the near term. So typically when we look at the corporate sector, we are seeing everybody now is aware that India earnings in the last 3 years have been growing over 20%. So that is a given. So almost everyone is assuming कि 20% growth आता रहेगा and we are good to go and things will be all right. But some trends which one needs to watch when one is looking at the 20% earnings growth, the top line growth for the corporate sector is slowing, and I will show you some data. Earnings is growing because there is lot of benefit which the companies are getting from the cost benefits, raw material cost benefit, freight cost. काफी सारे सब बढ़ गए थे, अब सब पिछले 1-1.5 साल में कम हुए हैं, तो उनका benefit आ रहा है, तो it is good. So that is good, and nothing wrong in that or nothing to be worried about, but I'll show some data. One other thing is the quality of growth. We say that Sensex is trading at 20-21 PE. Long time average 17-18 है तो ठीक है, बहुत expensive नहीं है, but we have to also look at the composition of earnings, which I'll again show through some of the charts which I have. India consumption has been generally slow, but premium end of the market is still resilient and things are okay. The bottom end of the pyramid is something which is a bit in a stress, and for a broader recovery, I believe that we need to have much more broader consumption recovery trend to be seen, and that is when we are listening to corporates after their December quarter results, their commentaries, some people are indicating that there are some signals of the tier 3, tier 4 market recovering, but we are still to see a broad-based kind of a recovery. Interest rates, to me, see, there are many today global events to talk about, many things to decipher, try to triangulate and think about how the markets will move. But the most important macro factor which I believe determines how the equity markets should eventually show the valuations is the interest rates in the economy, because interest rates, if it keeps going up, it means that the PE of the market has to come down. That's a very simple logic in a way, because as the interest rates in the system goes up, your fixed income or the debt, it starts becoming attractive. Equity market का जो PE होता है, let's say 20 PE है, तो equity का yield 5% है, मतलब 100 divided by 20 becomes 5%. So equity का yield 5% हो गया, डेट का यील्ड आज 7.5% है, आपको फिक्स डिपॉजिट में 7-7.5% मिल रहा है. एक्चुअली इक्विटी से ज़्यादा फिक्स्ड इनकम अट्रैक्टिव है ये पॉइंट पे. अगर मार्केट का पी 15 है तो देन एट दिस पॉइंट इक्विटी विल बी अट्रैक्टिव. बट current environment, in the current regime, when the debt yields are at 200 basis points above equity yields, generally equity returns have been slightly moderate over the next 1 year. So this is a data point which has one looks at the history, that has been the trend, but we have still not seen those trends in the equity market. Equity market is still very buoyant, liquidity is driving, so it's okay, but to be aware about lot of the so interest rate is something which I'm going to talk about, and what happened in the last quarter of last year is also important from that perspective. A good thing for India is that amidst all whatever is happening globally, our corporate sector is in a very strong position. The balance sheets are in a very strong position. The moment we have broad-based recovery, I think the corporate sector will be there to their capex plan or growth plan, and then we will have a strong growth ahead. We are not levered as such, and hence one should not be worried as far as the corporate sector is concerned. This chart, this is our internal analysis of the Nifty 500 companies, excluding the financials for all the sectors. These are these sectors which we have done the research for: IT, energy, excluding Reliance, staples, and excluding ITC, communication, materials, which includes building materials, cement, agri material, all of those, consumer discretionary, which includes automobile and other consumer discretionary, industrials, utilities, healthcare, real estate. Now this is the revenue CAGR for the companies. Yeah, you can skip this left side part and focus on the right side part, this part. And what one sees is that so we had this COVID phase where first we saw a massive dip which took place, and then the recovery, which it was a very sharp recovery across the board. And then the markets actually unexpectedly did really well. Corporate sector started doing well, and from the low base, I think most sectors saw the benefit of growth. So by the time third quarter of FY22, fourth quarter of FY22, first quarter of 23, the last year, we were all seeing good growth in the top line of the companies. So these are the top line YOY changes year on year, which means that third quarter 22 over third quarter 21. So the sectors actually did extremely well. But what we are seeing now is that for most companies, the top line growth has been moderating. The red color showcases that the growth rates have come down to single digit. So let's say IT sector, we all know that the growth rates have moderated. The energy sector, the growth rates are moderating. Staples, the top line growth, this is all top line growth. Staples, we know all the HULs of the world, Daburs of the world, they have been talking about low volume growth. The rural is not recovering. Material is in the same boat. Healthcare is actually doing well after a while. So healthcare is okay. Real estate, the accounting is something which is optically, so they will follow the methods which will lead to ambiguity in the numbers, but one can ignore this. But anyways, the point is that broadly, for most sectors, we are seeing that the top line is moderating. Now, why is this important? Is from the fact that when we are looking at the earnings growth for most of the sectors, earnings growth is still resilient. So you will have for most of the companies, the earnings growth is strong. The reason for the earning growth being stronger is that if you look at most of the commodity prices over 1 year has fallen down. So energy prices, chemical prices, metals as a commodity, and agri commodity, a lot of the prices are coming down, which is actually benefiting the cost side of the companies. Now, it is simple maths that if you have top line growing at a single digit and costs कम हो गए हैं, तो आपके bottom line will grow at a double digit. My point is that how long can this sustain? After falling the commodities, some of the commodities are maybe now, they have created a bottom, not falling further. Some commodities have started maybe showing some inflection on the upside again. And already the low base effect has got created till the last year. Hence, let's say from over the next 2 or 3 quarters, if we do not see the top line growth recovering back, then we will have challenge in terms of the bottom line growth as well. So I think from the next 2 or 3 quarters perspective, it will be important to monitor how the flow through of first of all whether the top line is recovering for segments or no, and how the flow through is going to take place. In most of these, what we have seen, the industrials as a category, which is more driven by capex, those are still doing well. But other than that, as I showed, a lot of the other things are not working well. So I think the key takeaway for me, which we are monitoring very minutely, is going to be the next 2 quarters or 3 quarters earnings growth. How is that going to shape up, and whether we are seeing recovery in the broader consumption broadly as a category or no. I think that's going to determine the overall growth rates. The second aspect is the quality of earnings. So when we talk about the valuations for the market, we say that valuation is what is price to earning. Price मतलब जो आज का stock market price है, उससे हम लोग सारे कंपनी के प्रॉफिट को डिवाइड कर देते हैं, वो प्राइस टू अर्निंग्स हो गया. तो वो 20 टाइम्स है, हिस्टोरिकली एवरेज 16-17 टाइम्स है. तो ठीक है, वी आर लार्ज कैप्स, हम बोल रहे हैं कि बहुत एक्सपेंसिव नहीं है, दैट इज फाइन. बट व्हाट इज दिस composition of profit is also getting skewed some bit. And when I say that, what do I mean is the composition of profit is also getting having higher contribution coming from short cycle businesses. So when we say that, what I mean is पहले IT 20% ऑफ द प्रॉफिट होता था, 26% ऑफ द प्रॉफिट होता था 2020 में. That has come down to 14%. So IT sector is generally considered to be more linear growth, structural growth, cash flow generating, high ROC business. And where even if they start trading at slightly expensive valuation, you won't mind, because you know that they will continue to show growth over a long period of time. But the profits there are under a bit of a slow phase right now, because we all know global markets where their customers are US, Europe, they are slowing. Yesterday I saw the news, Japan and UK, they are now in recession. I mean, officially, because of their negative GDP growth, quarterly GDP growth rate. So globally, that is a challenge. The segments such as energy, consumer discretionary, which largely auto hai. Auto mein it is not very short cycle, moderate cycle I can say. But my point is that a lot of these, and then also the material, automobile as a category, Staples has come down from 14% to 6%. So what I wanted to say is that the quality of the earnings is also changing, which means that, let's say, if these earnings which are coming from the commodity category, if they were to suddenly turn adverse, the valuations will start looking a bit more expensive. This is a valuation chart for you from the same context. I wanted to showcase that this is for the Nifty. If you look at the long-term charts, we are slightly above the average, not reached at a peak point. But again, as I said, the quality of earnings is something which one has to sort of keep in mind. What I was talking about, the price to earnings and the fixed income yield, this is the yield gap. So this is 2.5, this is 3. So as you go above 200 basis point or 2.5, the dividend yield and equity yield, in general, we have seen that equity returns over 1 year period tends to moderate. So hence, this is only to sort of highlight that the expectations has to be mediocre. The other thing which I wanted to again highlight from the corporate sector, how they have been producing their results, is the fact that premiumization trend is clearly visible, and that continues to do well. And how is that being seen is that if you look at the automobile sales across categories, two-wheeler, Tata Motors, other OEMs, volumes growth has been in a single-digit range. For two-wheelers, it is in a negative range on a YOY basis. But the revenues are in a double-digit range, which means that premium, and we all are seeing that premium bikes, let's say SUVs, are getting sold more. So hence, I think at the higher end of the curve, the impact has been little less, but at the lower end of the curve, the impact is little more. So if you look at the staples as a category, we have taken 11 FMCG companies as a representation. The light green line is the volume growth for the sector till second quarter. We've not still incorporated third quarter, but the volume growth has been on a decline. And the dark shade bar is the price increases. So companies had taken price increase because earlier, the commodity prices were high and they wanted to pass that on. And that has led to the volume, the overall volumes decline. And again, we all know that at the bottom end of the pyramid, it is hurting the lower end of the spectrum, and hence the demand momentum is slow. So this is something which we have to keep in mind. The third big segment contributing almost 40% to the Nifty's profitability is the banking sector. Banking sector is also a proxy to the broader economic activity. We are in general positive on the banking sector, but one trend again which we are witnessing right now, and you guys must be aware, all banks are facing challenge in terms of raising deposit cost बढ़ रहे हैं, and which is seen in the their margins. So net interest income growth is good, but it has fallen from the highs, and this challenge is going to sustain. Maybe the banks may have to look at reducing some bit of their bring down the loan growth so as to bring stability in their deposit and loan balance, and hence that will lead to some bit of small deceleration. And IT sector I spoke about. IT sector is already seen, this is again the trend for the IT sector revenue till the second quarter, and if we till 23, and if we look at the dark line, this is the S&P 500 revenues. So IT sector is very highly correlated with how the global companies are growing. The expectation there is that the global companies are going to show lower growth, and hence the IT sector outlook becomes slightly challenging in the short term. So basically my point was that through all of these, what I wanted to say is that there is definitely some slowdown which is there, while the markets are not showcasing that, because earnings growth is coming through, and hence from that perspective next 2-3 quarters become important, that if the earnings flow through doesn't keep pace and the top line still remains slow, then it can have some repercussions on the market. Maybe from a earnings upgrade cycle we may be facing a slightly more downgrade cycle. The other thing is that the markets have been doing extremely well Last year was a very good year. Mid and small caps. This is specifically for the mid and small caps. The mid cap and the small caps towards the fag end of the year did extremely well. I think it was a global sort of a synchronized kind of a move where we saw Nasdaq also doing extremely well. अभी उसका रीजन ये है कि expectation started coming across that interest rates will fall. As I said, interest rates are one of the most important macro factors to watch out for. And the expectations began that the central bankers will start reducing the interest rate come Jan, and the expectations are getting belied, and maybe there is some delay in how the interest rates finally will decline. See, these are very unpredictable. To me, frankly, इंटरेस्ट रेट 0 से 5 गया है वहाँ पे. 5 का 4.5 भी होता है, 4 भी होता है, तो भी बहुत ज़्यादा है वो. इट इज़ नॉट अ स्मॉल, इट इज़ अ बिग number for them to deal with the kind of balance sheet debt they have. Definitely these, if you ask me, my belief is that even if it comes down, these high interest rate will be a trigger for the economies to slow. I mean, even if it is a 4, the economies should ideally slow. And markets are more driven by the short-term sentiments and liquidity, because that expectation was there. We saw in the last quarter, let's say, very sharp rise in the markets. In a way, the expectation of interest rate cut have got factored in the markets at this juncture, and hence from that perspective, if it is not happening, the risks are again suddenly rising. We saw that US yield has moved by almost, I think, 30 or 40 basis points from the low in the last few months. So I think that is a risk which is sort of coming about, and hence maybe in the short term that manifests itself in terms of the some bit of sentiments being affected. Balance sheet, as I said, for the corporate sector is very good. This is a very positive point as far as India is concerned. Never in the past, today our ROCs are close to 17%, which is a very good number. Our balance sheet debt is just about 50%, which is a very good number as far as India is concerned. Why we are seeing that structural growth story in India looks very sound. I think anyways the visibility of long-term growth is very high as far as India is concerned. Our balance sheets are very good as far as India is concerned, and which is where I think any small dips today are being bought into. Investors know that long-term trend है, थोड़ा time अगर नहीं भी हुआ तो I think it will be good, and which is our view also that maybe if you don't come across any big event, I think there could be small consolidation correction in the market because of what I was saying, but those will be an opportunity for sort of the long-term investors. So I think from that perspective, one has to be aware about that. These are some charts which we just maybe designed across different sectors of the economy, how different sectors have behaved in the last in terms of the valuation. So I think so what we've done here is we've seen, so one is a market valuation and one is a sectoral valuation. I don't know, you won't be able to see the names, but broadly the chart shows that at the current juncture, each of these sectors, are they trading at a discount or premium to their 10-year and 5-year averages. So the dark color is 5-year average and the light color is 10-year averages, trading at a capital goods, chemical, telecom, utilities, automobile, technology, sectors which are still okay in terms of valuations, banks, insurance, energy, NBFCs. These are the sectors which are maybe okay. Healthcare is also okay, it's small premium, but I think that's okay. The other thing is that while we may just say that valuation is expensive, but fundamentally also if it is supported by earnings growth, then that is good. So we again broke down the returns of each of these sectors into two components. One was the price valuation re-rating, and one was the profit growth. So sectors which are backed by profit growth and re-rating, these are still decent. I would say automobile is decent, but sectors where profit has not still followed through and the valuations re-rating has happened, one has to be careful. This is more from our understanding of how sectorally we should sort of think about. So I think that is broadly the thought process on the markets as such, which I wanted to talk about. I'll pause for a few minutes if you all have any questions, or I would like to talk about some of our important aspects of philosophy, how we have been managing capital, and behaviorally what are the important tools which we have followed for us to sort of stay relevant and more sensible in any kind of market. So I think that's what I thought I should talk about. But if on the markets, if you all have any queries which you want me to address, please feel free. Yeah.
Yeah. So I think that overall the growth is slowing down, and in the side, you see these loans are quite increasing in India. The corporates are not being possible. And we are seeing the equity growth is strong, and then markets are very high. Even as we saw that equity is not that overshoot that we can say that it is due for a correction. So now, how is it going to be sustainable? It seems to be kind of paradox in trade itself.
No, so I think I think good point what you have. So data definitely showing that the corporate sector top line growth is cooling off, and at the same time you have a lot of the segments like if you look at the metals, this quarter has shown a remarkable change in the profitability on a positive side. You have all the oil marketing companies reporting a stellar growth because last year was a low base for them. And the government capex is continuing unabated. I mean, that is a good part. So a lot of the engineering companies are still okay. All the companies I showed, they are still in that 7, 8, 9% kind of a single digit growth range. So I think that is actually meaning that we still have one part of the two components of the economy, one component which is the investment related part of the economy, which is let's say 40 odd percent, that is doing well. 60% which is consumption driven, that is slow. Within that, premium is still doing well. More importantly, the highlight here is that some of the large segments, the IT sector, which accounts for almost between today 14%, but it can go as high as 20%. Consumer staples, which accounts for 7-8%, is come down to 4%. So these are large segments of the profit pool. They have been slowing, and hence, and these are more structural businesses, or long cycle businesses, if I can define it that way. So I think it is not. I'm not saying that this will lead to some bit of a big concern, but I'm saying this is something which one needs to watch out for. The data is showing that, which today most people are not ignoring, or they are not aware, and hence one should be aware.
There was a slide where you showed the real estate was in Q1 24. It was -4, and then later on it went to around 29%. Can you go to the slide?
Yeah.
So what does that created an impact in the real estate? What does that law, any new laws which were brought by the government of India to make that, I think, no, not this.
Yeah, I understand. So what happens is that when the real estate companies are making their bookings at that time, the cash flows what they get is not booked in the revenues. Once they finish that construction, that then gets and books comes in the revenue accounting. So many times what happens is that these numbers optically doesn't showcase you the right picture, because it again depends upon how much. So you are talking about this, right? This
prior
one?
Prior to one more slide.
This is the top line. Sorry. Okay. Yeah.
Yes. Minus. If you see minus.
Yeah.
Q24 was -4.
So
and
yeah.
then 29%.
So what must have happened here is that a lot of these real estate companies who are undertaking their projects, a lot of the projects upon completion of specific level, their revenue booking will start, and hence that number will fluctuate. And if you actually look at these numbers, they are very volatile for most quarters, and will not be the case with many other segments because of the nature in which the accounting takes place. Hence, I would not like to put a lot of emphasis on the real estate numbers, because the accounting practices there are different as compared to what other sectors will have.
So, what is your recommendation? Which is a sector where we need to invest? So, as a farmer individual, we have to invest now.
Okay, so see, I will give you my views on the sectors. In general, I would say that as investors, one should first think about diversifying investments, because sectoral investments are slightly more volatile and riskier and more if one has a very sound understanding of the sector and maybe ability to take some amount of volatility risk is there. But as far as sectors are concerned, today I feel if I purely go by the valuations, the banking sector looks okay because the growth rates, while they are slowing down, but they are still decent. Banking sector will benefit because of the economic growth over the next maybe 5, 6, 7 years. As it progresses, the banking sector should do well. Banking balance sheets are in the great health today. So when I say this, what I mean is that the bad quality assets in the banking balance sheets are at the lowest level today, which is a good starting point. We are at the cusp of recovery, and the bank's balance sheet are at a good point. ROEs for most banks, including some of the PSUs, PSU banks have also become quite better. So I would say that is one sector which is good. We like and we have decent amount of exposure to healthcare as a category because we believe that healthcare sector in general, if you look at the domestic market, it keeps growing at 12-13% in good or bad times. Valuations are reasonable because most of the companies face challenges post-COVID. Growth slowed, international markets were a bit challenging, but all those things are now are on slightly recovery path is what I can say. Some of the companies are also getting the US FDA plant approved. The plants were not approved, those approvals are coming through. So I think that is, and valuations are reasonable. So companies are, let's say, trading between 20 and 25, 26 times earnings, where other segments of the economies are trading at very high multiple. The other segment which we sort of like is within the consumer as a category, we like automobile because automobile has seen again a low cycle from 2019. 2019 was a high, and from there till 21 they were seeing pressure, and that cycle is now also on a recovery mode. My sense is that automobile globally has also seen a slow growth. The better way to play, and which is what we are doing, is auto ancillary, because they are catering to not only Indian companies but the global companies. And also within that, one needs to choose companies which are technology neutral, because automobile is going to go through a big technology transition. Electric vehicles are going to make a significant impact, and all the auto ancillary companies which do have neutrality in their product basket, those should be looked into. So these are strong positive sector. Now there will be cases where we want to invest into segments which are in momentum slightly expensive, but we will have ways and means to take exposure in those, like engineering companies. We can't ignore today because definitely there is a positive change, but they are expensive also. So maybe bad days we think of adding to some of the good quality companies. Consumer discretionary beyond automobile is something which is slow at the moment. My general thesis is that consumption in India eventually is going to keep growing. Income levels are growing. India, we are still just about 40% urbanized, 60% is still in the rural side. So those changes, transition are going to take place. More young people who will be entering the earnings basket, and the upscaling will take place. Aspirations are going to go high. So I believe in the consumption story, which is slow at the moment, and hence it also becomes a slightly more contrarian view to gradually build exposure into those as a category, and hence maybe over next 2-3 years it will become a good investment from the returns perspective. So I think that is how I would like to look at these segments of the economy.
One more question.
Yeah.
Okay. Last question I have is, say for example for the IT sector, if you really see the trend from the third quarter of 22 till second quarter of 24, so can I say the average is been, I need to consider the average and not just the 8%?
No, this is just a trend I wanted to show.
Okay.
Because even if you look at, I'll tell you, see what is this trend showing is, first of all, even that 22 was abnormal. Because we came out of the COVID, suddenly, there was a massive demand coming out from the companies globally. And companies over long period, in the first, let's say 2000 to 2007, the growth rates were in the 20% range. And then 2009, से लेके वापस they came down to 11-12%, and now you are in a single digit. So I would say single digit is also low. Maybe at we make average at between 13 to 15% over long period, because I think now the generative AI is going to become a new area where all companies are going to require their services, and hence that may become the new area for these companies. So 9 is also low, but since when do they inflect is the important question. Whether it is next quarter, third quarter, fourth quarter, we don't know. The companies, global companies, yesterday 3 companies, till yesterday 3 global companies came out with their results, and most of them are indicating that towards the end of this year, maybe they start seeing recovery. So I think that's the broader trend from the IT sector perspective.
So one question.
Yeah. See, and this also basically is showcasing the same. 22 mein, these are the companies, and then the kind of growth TCS in field 20% growth, 11%, and 9 months is 9% growth.
Just on the topic, I want to know regarding the chemical sector, because in last 1 to 1.5 years, the chemical sector has been doing not well as compared to the you can say the way market is going up. So what can you see the reason for this? And because chemical sectors products are used by almost everybody, like paints industry, pharmaceutical, FMCG, and you name a company. So when the sector is not doing well, how come these all things are doing well? And what can be the main reason for chemical sector to go down such a way?
So see, when we think about the specialty chemical companies, within chemical also, let me try to bifurcate between specialty chemicals and commodity chemicals. So let's ignore commodity chemicals because they generally tend to remain very volatile. In cases of specialty chemical companies, their addressable markets are skewed towards the global agrochemical players largely. So they have a huge amount of their revenues being generated because of supplies to the global agrochemical companies. Now, over the last 1 year or so, what has happened is that 2 things have happened structurally there. Is that they are in the process of reducing their inventory in their system. So let's say if the distributor has a large amount of inventory, they are not buying new. They want to first deplete the existing level of inventories, and hence they are not buying new. So the demand itself has become a bit slow. The second thing which has happened is that after the China's recent their COVID once their COVID subsided, the chemical companies from there have started suddenly dumping products globally at a cheap prices, and hence what is happening is that there is all the chemical prices have suddenly cooled off, important chemical prices, so which is hurting the Indian companies. The dumping of China is also in a way hurting the Indian companies, and when we interact with these companies or when we hear the commentaries of the global agrochemical companies, just like the IT sector, they are also saying that the inventory again rebuilding phase will take time, maybe another 2-3 quarters, still not clear, but the commentaries are yet not very positive from global agrochemical companies and even the Indian companies as such, and which is what is seen in the chemical companies. But when we look at the quarterly results for the chemical companies, the specialty chemical companies, till let's say last quarter, we were seeing YY declines happening for the sector, and even quarterly the declines were sharp. But at the quarterly level now the trends have stabilized. So from last quarter to this quarter, they have stabilized. So we are not seeing further deterioration. The second aspect is that a lot of the companies are not slowing their capex plans. So the companies which had announced capex, which is let's say Atul, which is one of our investing companies, they have maybe roughly invested in the last 3 years more around 2,500 crore in terms for the new capacities. These kind of investments they had not done in the previous 7-year or 8-year bucket. So, and those they have not slowed, they are continuing. Which means I think the other thing is that definitely the opportunity is there for the chemical companies, just that the environment is not conducive for them to grow. And so there is a double impact. You are doing capex at one end, उसका बेनिफिट तो नहीं आ रहा है, एग्जिस्टिंग बिजनेस भी स्लो हो रहा है, तो आपके ROCs बहुत हर्ट हो गए हैं. So I think this is a very bad period, let's say phase for the chemical companies, and maybe another 2-3 quarters or so we may still not see a massive kind of a recovery is what it looks like.
Certainly positive. So I feel that some companies are doing window dressing possibly in their balance sheet. That is my comment. Possibly you can correct me. And my observation on your sectors, what you have listed, 2 sectors probably you are not, I don't know what is the reason. One is defense and second is infrastructure. Because these 2 are major sectors actually.
It is part of this capital goods.
Both.
Yeah.
Infrastructure and defense.
Yeah, it is part of the capital goods where we have seen that the earnings growth, operating profit growth trend and the re-rating trend. So we have seen the prices have actually shot up, but when you look at most defense companies' results, it is not that they are inflecting in a big way. Prices have shot up because the opportunity is there. They are getting orders. Like, BEL, they said that we'll have 20,000 crore of order this year, but they are ending up, maybe they will end up having 30,000 crore as their order book. So order books are brimming. Order books are, growing. And that is the reason why the stock prices have reacted a lot more than the earnings growth for them. But that's part of the capital goods as a category.
On the AI, have you done any analysis on the AI? That how is it going to impact the way the IT sector is impacted, and the way the cost of writing code is also like from $500 or 100 lines of code is coming down to around $10 or so. So have you done any analysis on how is it going to impact it? Is there any data on that? How is it impacted so far?
In fact, if there are experts here, I would want to get their views also, but I'll share my thoughts before that. See, I'm not an expert, but I'm going by what I'm reading, what I'm listening, the data currently. The data is today that when we hear a lot of the management's commentary, like I think TCS mentioned that 1 lakh people of their employee base are getting trained for the AI. Likewise, all companies, if you hear their, even a smaller mid-sized companies, they are saying that we want to be ahead in the AI race. And we are training, reskilling our 30%, 40% of the employees are getting reskilled. There is a very interesting interview of the head of technology of TCS in the FY23 annual report. It's a 2-page interview, and I consider that person to be a very sensible person who understands the tech stack well. And what he said is exactly what your point is, that a question was asked that the generative AI is going to be effort deflationary. मतलब efforts कम लगेंगे, आप code उसमें immediately आ जाएगा, तो is it going to lead to risk in terms of the business? So he said that while it is efforts deflationary, but the volumes will grow. Every company will want to adopt the AI. So while my efforts are going to come down, the volumes are going to grow, and which will compensate for the reduction in the efforts. Same thing happened in case of digital. I remember that when this whole digital cloud journey started, our companies were questioned that you guys are into the services space, transition from the older version to the new version. How are you going to cope up with the new trends? And I think today these companies are boasting of 50, 60, 70% of their revenues coming out from the digital. So I'm just thinking, so again, we will as time passes, we'll come to know. But my assumption is that India as a country, the most important aspect as far as technology is concerned is talent and cost, where we are very competitive. There is one global SaaS company known as EPAM, and they announced their results yesterday. They gave detail of their employee change this quarter over last year same quarter. In that, they have given the breakup geography-wise: US, Europe, India. All across, the number of people have reduced as compared to last year. India, 5,400 employees have gone up to 7,000 employees. So, my point is that we have the necessary ingredient. If the effort deflation matches the low volumes, then it is going to be a risk. But if effort deflation leads to higher volumes, then it is going to be a positive.
So investing in IT.
I'm saying that it is, I feel that we have the strength, we have the capability to capture the benefits which technology change is going to create. The need for technological change is going to remain unlimited and for forever, I can say. And hence the companies which are scaling up, which are upskilling themselves, those are the ones, and all the large mid-sized decent companies, they are doing their job. So I feel comfortable, but as I said, every time you will encounter different periods in the cycle, and one can remain invested for long term. But if one has to be tactical, one should look at the cycles and maybe try to make some changes in the allocation.
We have discussed two sectors here, but there are certain sunrise sectors, right, which may come up given that we have a good economy now. Right, for example, we can think about Zomato, the logistics, with a dedicated freight corridor, right? Then we have travel and tourism. If you see in holidays, it's difficult to get hotel booking. So, is tracking this sector good enough, or as mutual fund house, you are tracking these upcoming sectors as well? And what's the best way to invest in this?
So we are tracking these sectors, and you are also aware that the biggest challenge in all these upcoming businesses are that there is no profit. The most important fundamental factor for any kind of investment, you as investor investing in my fund, I as investor investing in the companies promoter investing in a business, सबका फंडामेंटल फैक्टर क्या होता है कि कितना रिटर्न आएगा इवेंचुअली. अगर मैं आज कैपिटल डाल रहा हूँ, मैं बैंक में एफडी बना रहा हूँ, तो मुझे 8% मिलेगा. कोई और बैंक मुझे 8.5 देता है, मैं रिस्क देके उसमें डाल देता हूँ. मैं अगर कोई प्रोजेक्ट डाल रहा हूँ तो मुझे कितना IRR आएगा. नाउ व्हेन आई लुक एट some of these companies, so we keep evaluating. We evaluated almost all the new age companies, but in many of them we stayed away at this point because first of all we don't see path to profitability. Path to profitability भी clear हो जाता है तो we will be open to take exposures. These are definitely businesses, even I keep thinking, and we did one analysis where we were looking at the mix of our population. Gen Z, Gen X, these are different buckets, 10 years to 15 years, 10 years to 20 years, 20 years to 30, 30 to 40. These are different buckets. Now, in our mix of population over the next decade, the new age population ka mix is going to grow, which means what? They are going to be using more of the, let's say, the platform, e-commerce. So those trends are going to improve. We also believe that these are, these are areas which are going to be very active in terms of the transactions. But are these transactions really profitable transactions? Paytm, the biggest example today is they have massive 33 crore is their number of users and 10 crore is the number of distributors. It's a massive number. आप इंडिया में कोई भी कैटेगरी आप देखोगे ना, कोई भी कैटेगरी, जैसे मैक्सिमम आप साल में कितना बिकता होगा, तो जैसे मैं देखता हूँ 2 व्हीलर सबसे ज़्यादा बिकता है 2 करोड़. तो मतलब 2 करोड़ लोग ठीक ठाक लोग हैं जो हर साल इतना पैसा डाल देते हैं. 7 करोड़ की रिटर्न लोग फाइल करते हैं. देयर आर 7 करोड़ पीपल हु आर फाइलिंग रिटर्न. 33 करोड़ पेटीएम, मतलब ये बहुत बड़ा नंबर है इन द कॉन्टेक्स्ट ऑफ फ्रिज 60 लाख 70 लाख, AC 70 लाख ऐसे बिकते हैं हमारे यहाँ. तो वी कैन से दैट वी हैव reasonable amount of people who are buying products in the range of 1 to 2 crore every year. Here we are talking of 33 crore. It's a massive number. If these all were actually unit economics is working positively, then these can create a massive pool of profit and revenue. But it is not. And hence for us, I think if the most important factor, which is how much are they going to eventually generate. If that visibility is poor, then not for me, but for anyone, I think it is not a very sensible investment. But if you understand, we may be, let's say, poor in our understanding of some of the unit economics. Maybe there could be businesses which could inflect and become very big in terms of profitability also. So if somebody understands that and is investing, I think that is fine. But I believe in general, my sense is that these are areas where one has to be very careful. Most people have lost money eventually, because if you don't make profit, you are only dependent on external capital, then it is not a genuinely decent business to be in.
At the beginning, you said that the yield between the debt and the equity is around 2.5%, where the rate is around 7% and the equity is about 5%. 2 months back, I read that the Bloomberg and the JP Morgan had added the Indian government bonds in the emerging market debt bonds. So, do you expect the yield to go down, and if yes, by how much, and how that will impact if it will impact the equity markets in India?
See, very frankly, I don't want to predict also yields कैसे change होंगे, and I don't want to get into this game also, because ये किसी के बस का नहीं. अभी तक सब 2 महीने पहले क्या बोले थे, सब गिर जाएगा 50 बिप्स, और आज सब चेंज हो गया ना. मतलब tomorrow morning I can wake up saying that 25 basis point ऊपर जाएगा, and next morning I can wake up saying that गिर जाएगा, और market can change. So now the world has become very volatile. It's very, very difficult to. Never in the history the difference between our yields and US yields has been so narrow. Never. I mean, I think it is a very ideally, if you consider the historic data, our yields have to be much higher than where the US yields are. For 2.5% ka hi gap hai. So that is, I mean, we are in a way proving that our currency is also stable. So in a way that proves that as an economy we are very, very strong as compared to what it was. Otherwise, we could have been 8-9%. नहीं तो ये possible ही नहीं. But so I think there are so many metrics in this whole thing. But anyways, your point on the flow of money into equity, I think it starts from June, maybe is what I understand, and it will and because of which I think while in the last 15 days US yield curve has gone up, but our yield curves are still moderated only. 720 से शायद नीचे ही आया है थोड़ा. I think it is because of this aspect. I don't know how much it will fall through. Does it go down to 20-25 basis point? It will also depend upon whether the US, when finally it starts correcting, starting September, हो सकता है तब थोड़ा शायद अपना कम हो जाए. But we'll see.
I have a question about this white goods, brown goods. Like real estate demand is doing very well, and why is that is soft and why is it white goods?
We are also confused.
And you said you sold it off about a year ago.
Yeah.
So what is the reason?
So see, actually there are 2-3 aspects to this, and we also keep analyzing this data. So I also keep asking my analyst this question, यार सब इतना real estate बिक रहा है और टाइल्स नहीं बिक रहे हैं, वुड पैनल नहीं बिक रहे हैं, ग्रोथ कम हो रही है, वाइट गुड प्रोडक्ट्स कम बिक रहे हैं. सो व्हाट इज हैपनिंग? सो आई थिंक 2 things. One is that there is why we sold off also is there is excessive competition. So actually 3 things I want to say. One is excessive competition in case of the Whirlpool as a business. You have Lloyd's, which has broken down the price points and have created that competitive pressure in which nobody is actually earning in terms of the bottom line. Bottom line में सब pressure है. Second is that when we think of all these let's say tiles, if houses are getting built, why the tiles are not getting sold? The answers we get from the companies and the analysts is that as the construction happens, the timelines for every part of the projects, they follow a specific timeline. So tiles will be at certain portion of the development taking place. So now the expectation is that over the next 1 year, maybe the demand, the last 2 years, the growth in the development is high. So that will lead to all the demand flow through happening here. Second part is, as I said, in the it is just not about buildings, but single houses which are getting built by many people beyond the cities, those are also contributing, and those have slowed down, is what we are gathering. So I think, and the third important factor is that, see, actually, if we compare the and Whirlpool, because it was in our portfolio for long, we compared the long history of the companies, and the period in which 2013 to 2018 maybe, in that period, a lot of the commodity prices had cooled off, and that was one of the important phases where their working capital number of days had come down, margins had improved, and these companies were doing extremely well. So the price points were also lower, and they were selling. Now, all the commodity prices after COVID, they went up, and now they are cooling off, but not enough. Secondly, the competitive pressure is there. If a competition is wanting to be a loss leader, then it creates disruption in the whole category. And third, not the wider population is doing well today. So the rural masses are still not doing well, because they have to still come to terms to this high inflation number. Once you are okay with this high inflation number over 1 year or 2 year period, 50,000 की बाइक आज अगर 80,000 में मिल रही है, तो you have to come to terms कि मुझे अब 80,000 रुपए चाहिए, तो I'll wait for a year or 2 years. So I think these will take time, and as these inflation number becomes more palatable to the wider audience, then I think we'll start seeing some recovery.
Yeah, hi Vinod.
Hi.
Thanks for your time and presentation. So I have a few questions. I'll just take them one by one. See, you spoke about your interaction with one of the CTOs of TCS maybe.
नहीं, मैंने पढ़ा था वो उस मैनुअल में. I didn't interact. Yeah.
Okay. So I think there's just a follow-up question on kind of what somebody.
If you have any views, please share that also.
Sorry.
If you have any views, please share that also.
No, I don't have. None of this is view, and it's not because of IT stocks actually. It's not a narrative because of that. But kind of generative AI से ठीक है चलेगा, effort कम होगा, volume बढ़ेगा. But Indian IT model has essentially always been a body shopping kind of a model. जहाँ पे for each body you get a billing rate actually. So ठीक है, number of bodies कम होंगे and volume बढ़ेगा. But at the end of the day, India का जो IT companies का revenue model है, that gets driven by the number of heads and number of bodies. So any views on that? The reason being that ठीक है, we don't do any cutting edge AI job right now. So cloud migration is maybe for real, but in the past when consulting becomes a buzzword, तब existing revenue उठा के consulting में drop कर देते हैं, हमारी consulting revenue ऊपर जा रहे हैं. But what's your view on this? Bodies कम होंगे, volume बढ़ेगा, तो revenue फिर भी कहाँ से रहेगा?
So actually that interview which I referred to is talking about the same thing. So the risk is the real, what you mentioned, effort deflation, but volumes growing so much that it takes care of this effort deflation in more than what you see the decline of your efforts. Which means what? If you had required one person, now that one person is doing job of 3 people, but you are requiring 4 people because 5 other companies wants to adapt to this AI. So what he's trying to say, the compensatory effect is going to be because the volume expansion so much that it now. Other thing is that सी एक जो डेटा हम देख रहे हैं उसमें ये भी है कि आप ये देखो कि पिछले 2 क्वार्टर से IT कंपनीज हैव स्टार्टेड देयर एम्प्लॉय एडिशन इज नॉट देयर. इनफैक्ट एम्प्लॉय कम हो रहे हैं उनके, एट्रिशन रेट्स हैव कम डाउन. बट एट द सेम टाइम द कैप्टिव सेंटर्स, GCC हम जिसको बोलते हैं, they are seeing increase in their number of people. So globally, and I gave you example of EPAM, which has actually in India they have increased their head count. So the point is that as a segment, while it may not be in the listed space, but if you combine India as a country and the people who are contributing to this journey, there the number of people are actually growing because of the GCC and all. And if you go through the commentaries in the conference calls of most of the IT companies, I think most of the IT companies have addressed this issue. And only way I can today think is that everyone is saying कि मैं इतने लोगों को train कर रहा हूँ AI के लिए, generative AI space में. So I'm thinking that these companies are coming up the curve. It happened सेम मुझे याद है जब ये क्लाउडिफिकेशन और डिजिटाइजेशन हो रहा था तो अपने पास सेम क्वेश्चन आए थे कि हमारे लोग क्या करेंगे, बिकॉज यू आर बॉडी शॉपर्स, यू हैव बीन जस्ट ट्रांजिशनिंग फ्रॉम लो कोड टू हाई कोड जो भी होता है, but then these companies became relevant in the digital space. So just taking a cue from there, I'm assuming that these companies stay relevant in the new trends which come up.
Other question that I had was that you spoke about second of maybe PE price to book values, etc. And maybe just say any level capital reduction moderated over next 1 or 2 years. So talking about
मैं wrong होते जा रहा हूँ by the way.
sorry.
I am getting proven wrong.
That's fine, yeah. So I just wanted to know your views on second of maybe cash flow based valuations. Where do we stand, and historically speaking, किस level पे आते हैं? How does that correlate with returns?
So frankly, we've not done the cash flow based analysis. If we do that, but I think the general PE trend, if you monitor that, and see the cash flows till I think 22, the cash flow generation was higher. I think 23 onwards there is a higher need of the working capital. So थोड़े cash flows उधर और some bit of capex increase has also happened. So maybe by end of 23 or by now, there would have been some deterioration in the cash flow yields, and also the IT sector has seen the low growth where the massive cash flow generation is taking place. But frankly, I have not done the data crunching from the cash flow basis, so I need to do that.
Just the last one, actually, very quickly. Second of again, this is not because small caps are such. I'm not trying to build a narrative because of that. But second of normally there is a narrative going on that okay, जो भी capex है, industrial है, जो भी any capex हो रहा है government का, ये stocks ज़्यादातर small cap sector में belong करते हैं. That's the reason second of they are doing well. See, again maybe from past experiences, maybe 2005, 2008 का phase, etc. Second of does that mean that okay, during some phases, small cap valuations remain elevated for some time? Okay, ठीक है, correction आएगा बीच में छोटा मोटा, but on an average they remain elevated for a period of time because capex heavy companies small cap में ज़्यादा है.
See, small cap actually has across the spectrum you will have representation from these small cap companies, and hence I won't say that it is skewed towards industrial. Maybe that segment is doing extremely well today, and there is some amount of excesses which has also seen in some of these cases. We did one more analysis. We tried to pull down all the of the Nifty 500 companies. We ranked them according to the last 1 year return, price change, stock returns, and then plotted the ROEs. So if you see till the 1 to 3rd decile of the top performing companies, the ROEs are the poorest, which means the non-quality stuff is doing extremely well in the last 1 year, which is something, an important data to be aware about. What one needs to do is that while, and this is not wrong, मतलब ये होता ही रहेगा, बाजार में excesses कहीं पे होंगे, कहीं पे sectors will be ignored, but the important point is that as investors, we have to remain vigilant. We have to remain more rational in our approach, and wherever we see that the companies are sensibly deploying capex, which is going to generate 17-18% ROEs over a period of time, those companies will give you returns. थोड़े से expensive होंगे तो भी ठीक है. The only thing is that for expensive companies, your stay has to be longer. So if you have planned to put money for 1 year, you just extend that by maybe 2 or 3 years is what I'm going to look for. So I think this is the only phase. This is that phase of the market where as investors you have to just remain careful. It's not that you have to get out of the category or something like that, but be sensible in the approach.
I have 2 questions. One is philosophical and one is sectoral. So I'll go with sectoral first. I belong to education industry. So when we are talking about India becoming most populous country, lot of development things happening towards the human resource. So how do you see the education sector performing? What do you see in there?
So first of all, very few listed companies. We have this big unlisted Byju's case today, the largest maybe player, what happened there. But just not this company. I am saying we had invested in a coaching company, Career Point, which had listed, but we didn't see any wealth creation happen there. And I'll tell you the reason why. The reason is the structure of the education businesses in India. You need to create a trust asset owner and a operator. Trust can't earn the money, and hence the asset owner, it gives the infrastructure on lease. Whatever fees you generate comes out to the operator or the the company management company, and then the trust, as a trust you can't make any profit. So the structure is something which does not lend a lot of clarity to a lot of investors, and first of all that is number one. Number two, as a industry, what happens in education sector? Let's say आज मैंने कोई मेरा स्कूल है या मेरी क्लासेस है, आज मेरे पास 100 बच्चे हैं, मैं आई एम टीचिंग दिस 100 किड्स. नेक्स्ट ईयर मुझे ग्रो करने के लिए 100 बच्चे तो पहले ढूंढने हैं, उसके बाद 10% ग्रोथ आएगी, तो 110 बच्चे. सो आई नीड टू एवरी ईयर, इट इज लाइक every year it is like running on a treadmill, that you have to keep finding new. अगर HUL अगर साबुन बेच रहा है, उसके लॉयल कस्टमर्स हैं 1 लाख, तो वो 1 लाख रहेंगे, हो सकता है उसमें 105 इधर उधर हो जाएं, बट दोज लॉयल कस्टमर्स विल ऑलवेज बी देयर. He has to only focus on the incremental growth. He has to get into new geographies, new areas. But here the growth becomes challenging. The structure is very difficult in the current environment, and hence I think the businesses have not created wealth, while as independent promoters they have generated good cash flows from the businesses, but it has not yielded similar returns to the investors.
Second question is about the investment industry. Since we are talking about artificial intelligence and AI and other things, so is it, I mean, till date we are investing by looking at, say, Mr. Sandeep Kulkarni as my fund manager. How much this algorithm-driven things are likely to come, which are like today we are talking analysis, we are interaction-driven other things. But tomorrow AI takes over the investment also, and then everything goes into Google kind of thing. That okay, you just put the money and the AI will decide. So how much the industry is prepared for it, and what is the future of the investment industry?
So first of all, investment is a blend of science and arts. It is not pure science, it is not pure arts. What is science and what is arts? Science is that 2 + 2 = 4, but it never happens that way. आपने देखा PE re-rating अलग अलग सेक्टर्स के लिए अलग अलग था. I mean, in some sectors you've seen that PEs have re-rated by 50%. In some sectors P's have rated by 20%. In some sectors, it has not seen any rating despite profit coming through. So why is it that this is a behavior aspect? Why is it that in some cases the same earnings growth is not matched with same price change or the P change? In some cases, it is possible that your earnings are growing, but your P's are derating. Banking, आप देख लीजिए, banking is producing very high growth in terms of profit, but prices have corrected. HDFC Bank has come down. They have still shown growth. So this is the arts aspect of it, that now I have less confidence in, let's say, a post merger of HDFC Bank. What is going to happen? Is the existing management capable of taking care of this broader ship or no? So this is the art part of it. Now science is something which you can work with. You can have technology platforms to work for you. Arts is something which you will have to keep thinking, and which is where the artificial intelligence type of things are going to play a role. At DSP, we are trying to build our own software technology platform. We've called it Jarvis, but we are going to change the name because we don't have ये trademark किसी और का है. But इसमें हमने क्या किया है? We are designing this tool where we have put all our databases, financial models into the software. We have all the external data, let's say commodity, the sectoral data, auto के volumes हुए, banking sector के credit data हुआ, all lot of data, the history of price change. So whatever data is possible, we are trying to blend in this. And then now we want to make this tool help us in taking decisions. What kind of decisions? So let's say if I am looking at example, there are many case studies which we can work with. As an example, let's say if I want to buy X company at 30p, my software, the landing page of this software, it tells me that historically, if I had bought this stock at 30p, every time it hit a 30p, I am buying that stock. And it does the analysis that over a period of next 1 year or 3 year maybe, what proportion of the times has it beaten the Nifty or no? These are the base rates. So today, when I look at independently a company, अरे इसका 30p है मैं ले लेता हूँ. But at 30p, has historically the company made money or no? Is something I want to. This is not clear, but this is what it shows that this is Ultratech Cement, EV EBITDA, TTM basis पे ये point पे था तो how much has the stock generated return on a 1 year, on a 3 year basis? How much has the Nifty generated return on a 1 year and 3 year basis? How much has it outperformed? And then deciles of performance. So, we are trying to make use of these data points. The second thing is that at some point, we are trying to record our decisions also. If we are taking a decision to buy X company for XYZ reasons, the system is recording that. And in future, if the same environment were to repeat, then the system throws up that, this is how you had taken decision at that point in time. Are you willing to look at it more? So the triggers are going to take place. So see, today we have just about scratched the surface. It is not that I think it's a small beginning, while we have seen a lot of things for us. So see, this is from 13 to 23, threshold of 20.87 EV EBITDA. This is on a TTM basis. If I buy, then on a 1 year basis, in the past, base rate suggests that the stock has delivered 1% return and Nifty has delivered 6% return. The win ratio is only 32% of the times. But on a 3 year basis, 9% and 10%. So, then I know that if I buy a little expensive, my holding period has to be higher. So the point is that we are trying to be, and this is what eventually the science part of it combined with some behavioral aspects will eventually get captured in the AI context. We are trying to do that. थोड़े बहुत changes होंगे, but definitely the art part of it, understanding the managements, understanding the change, and those will remain critical for us to sort of think about and embed that with this data to make more informed decision. Yeah.
Sir, you are managing almost 30,000 crores in your small cap fund, right? It must be a challenge for you because it happens you're not.
I can hear.
You're not nimble enough to take decisions, right? So, with the increasing assets under management, taking the future growth, how do you approach this as a fund house?
So see, definitely as the fund size has grown, when I started it was 300 crore, today it is 13,000 crore. Mid cap was 1,500 crore, today it is 16,000 crore. The ability to maneuver is less. It keeps becoming lesser and lesser. But anyways, what we have generally followed as a philosophy is to buy good businesses and hold them for a long period of time. Sir asked about the specialty chemicals. We actually were the first ones to have invested in specialty chemical stocks way back in 2011-12, and in lot of these high quality companies, including SRF, Aarti Industries, Atul, PI Industries, and these have through time these have generated for us returns over minimum 20 times to 30 times to 40 times over the last 8-9 years. And not that it was easy in the interim to stay with them, because there were periods when these businesses faced short-term challenges, and there was a point where the research analyst street at large started recommending that one should sell because the environment is becoming adverse. But we held on because we felt the game is very big, and there's no point in unnecessarily trading in and out in the names, and we in the process created a huge amount of wealth for ourselves. likewise, we had let's say invested in a transformer company old time, which is at it was almost 10, no business. There was no, I mean, 3, 4, 5 years back, if you go, you will not see that the power sector is suddenly showing this kind of inflection in terms of the business growth. And today, and we remain invested, and it was not greatest of the time back then, but today at such high valuations, 30 times also, people are wanting to buy those companies. So the point is that the way to deal with some of these is that, first of all, we take a slightly longer term view. Our turnover ratios are lowest maybe, and the way to deal is that you buy few businesses which are out of fancy at a point in time, so you are able to accumulate a decent amount of that quantum, and you sell when the stock comes in fancy, when there are excessive valuations most investor wants to invest. That is one way to deal. Are we able to do that with 100% of the stocks? No. बहुत सारे stocks होंगे जो हमको at a point in time in momentum we are liking it, we want to buy, we are not getting. So at that time we trade them for a long period of time. So it is possible that for months we are either selling or buying a company. So that is also a possibility.
What is your view on the high valuations in the mid cap and small cap? They are hitting highs every day, and so also the fund houses have started increasing cash. So is it like time to book profits, or like what's the approach?
See, definitely the valuations are high, and I won't disagree to that. And I think as investors, wherever investors have, generally depending upon each investor's profile, if they have met their objectives, they have need for capital, cash, they have seen good returns, it's always good to take some money out at some point in time when there are excesses. For investors who still are very limited in terms of the exposure, they still have a long runway available, 7, 8, 10 years ahead of them, wanting to see wealth creation. I think for them, the advice will be different. Maybe you continue at every dip, you add more. Dips will be there. It is not seen the last 3 years, which means it will not happen. That is not the case. Dips will be there. Be prepared for it. And at a certain point, you invest. So I think the recommendation will be different for each individual set of investors. But at today's juncture, the valuations are high. Few pockets of opportunities are there. Not a widespread set of opportunities. And maybe we would be happier if we see some consolidation or correction across some categories. We would want to buy some of the businesses. Businesses are beautiful. Companies are doing extremely well. We are getting very excited with what the companies are doing. We want to participate maybe at appropriate price point, and hence we also feel that if there is a correction some bit, it will be healthy, and for us also it will be an opportunity. But the very fact that, like me, there are many people who are waiting, including the international investors, the corrections will also be shallow. It will and most dips will be bought into is also what I feel, unless there are any major big issues to sort of worry about.
I have one last question.
No, go ahead.
What's your recommendation to invest in the international market, like the US market, or Japan, or China, or and what are the repercussions? Should we go on?
So, see, I think it all depends upon where in the cycle an investor is. So, investors who just started a journey, maybe you come to terms with the markets as such first, try and understand the Indian markets. Slightly more experienced people who are, looking at some point also. To me, the most fundamental case is that for, let's say, low to mid-sized investors, they will have their expenses because of their education of their kids or something like that in the international US market, the developed market. It is a good thing to have some exposure there because you are covering your currency in a way. So that's a fundamental aspect. And the third, which is the premium category of investors, they want to have, they are already invested, they understand the markets, they want to create more diversified exposure. So it is good that if you track global markets, there are times where our markets are expensive, but there could be some markets which are cheap for a reason. Can look at those which is where the multi-asset type of strategies have got created, where we are looking to give exposures to the investors from the international viewpoint. In our healthcare fund, which we are running, actually what we've done is that we have exposure to the international med tech companies, which means the the companies which are manufacturing the instruments and the other medical stuff for the hospitals and patients. Your surgery tools and the other stuff, because in India you don't have those type of companies. So what we've done is that we believe that that's one area where our investors have not got the exposures, and there are genuinely very good companies, high-tech companies there, and we have provided that exposure through investing into few companies in the US markets catering to this type of area. So at times it makes a lot of sense, because you don't have a few areas or few segments which are relevant and are growing, and hence it is good to invest into those and have exposures there. But like I said, it is a very technical subject, science plus arts. So the more understanding you have, the more experience you have, it's good to diversify across different markets, because then you are able to cope up with the volatilities of different markets also.
I'm having another question.
Sure.
I just wanted to know if you can throw some light on like any analysis done on energy sector. Because what we see is that more forthcoming is coming on solar developments.
See, I want to share my experience of the history of my looking at the sector. I was actually in 2009, I was tracking the power sector, and massive, not in the renewable, but the conventional energy, a lot of investments were taking place. NTPCs and all, they were having 5,000 megawatt of power projects every year under their planning. Power grid was having a huge amount of capex every year, and then suddenly everything fizzled out. And a lot of the material handling companies which were catering to these companies, a lot of them actually went bankrupt. Three odd companies actually are now not to be seen. So there was, and if you look at the government capex structure back then, power constituted the highest amount of the overall capex, maybe 30-40%, I don't remember exactly, but very high component was coming out from the power sector. So basically what happened is the execution failed, and everything actually went for a toss. This is a phase 2 with a very different type of a composition, where it is the global need that we are all aligning to energy transition, and hence the carbon reduction, and hence most companies are now wanting to invest into the renewable as a category. So as we stand today, it looks like very real. It looks like this is something which is committed. Countries have taken up as their commitment, and in the next decade, the investments will happen meaningfully in this area. India also has made their own plans, and a lot of these companies are wanting to serve those areas. So I think as of now, at least from the commitment towards your environment, it looks like, we should not see any major issues. Execution हो सकता है कि थोड़ा ऊपर नीचे हो जाए, but the opportunity is there, wherein we are looking at companies, businesses where the metrics are still okay in terms of their ROEs, cash flows, growth, and looking at those. So why I gave the background is that, see, many times, as an experience, fads do come up. Only thing is that
how will this sector run in the next forthcoming years?
As I said, it is
what we foresee is that Adani is coming up with picking up most of the ports, like shipping and airports.
वो तो बहुत सालों से कर रहे हैं.
Power.
वो तो बहुत सालों से कर रहे हैं.
Now they are coming into the power sector also.
Yeah.
So most of the focus is seen on power sector. So I just wanted that if an analysis has been done on this energy sectors.
No, so analysis is that only thing you have to focus on is execution. If for some reason the execution fails, then it leads to derailment of a lot of the thesis. Right now, I don't see any reasons to have any dilution in that thought process. It looks like the execution will take place, the investments are going to take place, and hence a calculated exposure in this segment warrants your this one attention, basically. Yeah.
Because the government is also doing a lot of things in energy sector.
Which is what I said. It is committed now. It looks more real. By 2030, we have targets, and those have to be met. Again, by the way, I should also tell you at the same time that the yearly plan of solar addition we have not been able to meet. So that also one needs to keep in mind. We have 500 gigawatt of solar addition plan, and I think if I remember right, we had 50 gigawatt every year. We have not achieved that till now, by the way. So I just want to give a mention of this, because see, finally execution is going to matter. ये है बहुत बड़ा plan है और होना है. अगर 23, 24, 25 की जगह 26 में आया और हम 24 में बिल्ड करके बैठ गए तो भी एक डिसअपॉइंटमेंट होता है. So what I'm saying is that these are capex heavy time. It takes a lot of time, and hence there could be in between there could be volatility in terms of the achievement versus the expectation. So that is something which I feel worried about. ये जो SJVN hydro power company है, their capex, actually that is the what project they are talking about, which is now coming up, which is why the stock price is also doing well. It's a 2-decade back project. It has still not come, and अब जाके आ रहा है. So I'm saying that it takes huge amount of time, many roadblocks, many bottlenecks. But anyways, the point today is that versus the history, it looks in a better shape today is what I can see. The quality of the distribution companies are also improving because of the government's initiative and that reform which they did. क्या बोलते हैं इसको? I forget the name. But most of the distribution companies which are seeing reduction in the losses, they are raising the rates. So I think that is also important. So I think it looks like we are in a good shape today as far as this segment is concerned.
Do you see this sector, small cap as mid caps, as a minefield in terms of corporate governance or the disclosures that we get in India? So how do you mitigate that risk that you have in your portfolio? Are they generally sector-specific risks, or we see basically the transparency that we talk about and the management commentary that we have, right? So in terms of, I would like to understand more about how do you approach in mid caps and small caps area while managing all the risks that we see.
You're absolutely right. I think the whole journey of wealth creation is about stock selection and stock elimination. And selection, our positive criteria is on the quality of growth, cash flow, balance sheet, debt, management quality. That matters. Governance is one of the important aspects. And on the other hand, reverse of all this, high leverage, low ROCs, poor track record of capital deployment by the promoters. If you look at, for any company, the best way to check all these is go through the 10-year track record or 15-year track record of the company and see what they are doing versus what they just keep commenting on a daily basis. So I think that this is something which has been a backbone for us while looking at the small cap, because why I started as an introduction talking about the two big those events which hurt the returns in that period. Those were the learnings to start off, and hence the decision to stay away from potentially mine fields like that was ingrained in our philosophy. But still we felt that even after doing all of the work, it is possible that we may slip and we are not able to decipher that if there are any issues as far as the governance accounting is concerned. So we actually in 2020 we hired one person, and he's known as a skeptical analyst in our team. His role is to carry out forensic research on all the companies. He has his own parameters. Beyond what we do as research or analyst does the research, he will go beyond that and check from other promoter entities, what are the related party transactions, accounting juggleries, any fraudulent transactions. So all those basically is what we is filtered, and then it comes to us in a way. And that is why we did that, because we know that small cap is a big category for us as a house, but it is also fraught with a lot of risk, and we want to keep eliminating the quantum of that risk at every juncture, and hence we are trying to take all that the actions which reduces that risk, and hence we have this role there. No, see, like he asked, tactical position के लिए चांस ही नहीं है अभी, वो कैसे उसको लेके बेचें. अगर मेरे को 13,000 crore fund, if I have to buy even 1% is a small position. फिर भी it is beyond 120-30 crore or 150 crore. To buy that with a tactical mindset and then sell, is not easy. Only thing is that what we try and do is that, let's say if we like a company, we want to own it for the next 2, 3, 4, 5 years. And in the interim, they will go through again phases. So let's say at a point in time, they've done extremely well. Valuations are excessive. We may want to trim and not get out of that position. We'll trim that position. And at some point, if the price becomes more attractive, we may want to raise the stake. So we will do tactical resizing of our bets, but only tactical buying to play a specific event is a difficult proposition. I mean, I hardly remember we do that. We generally buy with a slightly longer term thought process. I had said 5 minutes of interaction, but thank you. It is very engaging. So, in fact, you want me to throw light on anything else, or so only one chart I will show, which is because we've covered a lot of it, and it is already 1:05, so people must be hungry also. But what I'll do is that just show one piece of our philosophy, so that becomes. अच्छा मैं एक दो और ये बता देता हूँ. Sorry. So you wanted to know about how we, and this is specifically for our small cap and mid cap. Three important pillars for us are good business, good management, and let's say decent valuations. Businesses needs to be simple and predictable. Large segments where the potential for growth is high. Companies with moats or competitive advantage is something which we keep looking for. Positive cash flow, high ROEs. For us, the threshold ROE is 16%. Some businesses at the cusp of turnaround, we are open to look at those if they are run by good management. Management itself is a very difficult assessment. This is the arts part of it. So we have to look at the long history. Capital allocation कैसे किया है, कहाँ पे capital उन लोगों ने decline किया है. Those becomes important. Passion of the management, past track record. See, capital allocation is a very important tool for us to understand the management's credentials. In fact, by the way, we have shared our philosophy on our website, so it is open in public. Generally, people don't do that. What are our criteria in which we go about investment? So, average ROE of 16%, I spoke about. Growing businesses होने चाहिए. The businesses should have, the leverage. Positive leverage benefit they should be able to get. Volatility of earnings should be low. Debt का हमारा एक threshold है. So we have quantitative metrics also to sort of back, and hence these are maybe our positive catalysts for when we are looking at any companies. And maybe a last slide I want to show on some important aspects of small cap, the nature of small cap. We had done a lot of analysis on the small cap universe because we saw that a lot of money has gone into small caps. So this is the calendar year wise drawdown matlab fall, and in small cap, Nifty small cap 250 index, Nifty mid cap 150 index, and Nifty index. So if you see the red colors, they are fall in the small cap universe, and you'll see that in case of small cap, the red color is high, which means the volatility in small cap is generally higher. Awareness of that is important. Last 3 years were different, and hence one needs to highlight. The other thing is that एक दो और चीज़ें मैं बता रहा हूँ. Okay, so this is for the DSR fund, where if we look at the long-term horizon, what is the picture suggesting? That if you look at the 7-year picture, on a 7-year basis, the fund has not delivered less than 0% return, which means it has not gone negative. So if one is investing for a period of 7 years, it has not shown. Plus, the percent times the fund has given returns over 12% if it is invested with a 7-year view 100% of the time. So till now, this has been the track record. And hence, investment in small cap has to be only considered with a long-term view. The most important slide is this, where again, on a 7-year return basis for the DSP small cap fund, if we invest through SIP, if we invest when the markets are at the all-time highs through SIP, this is the kind of return on a 7-year scale. And if we invest when the small cap index has fallen by 20% on a SIP basis, actually it is lower. But anyways, the point is that it is still decent returns at any, and I mean, not timing the market at any point in time in the market. If you are investing through SIP, I think the return generating potential over a longer term is decent. So I think that is what I had to say. With that, let me end my talk here. And Sandeep, over to you. नहीं, मिड कैप का नहीं है, हमने स्मॉल कैप का बनाया है, बट इफ यू मेक दैट देन वी विल शेयर.
Yeah, I think that's it. Thank you for all your patience.
Thank you.